But with where gold and silver prices sit today, have people missed the boat on some of these equities? Are they still cheap, or how are you seeing that?
Missed the boat. I mean, this is just getting started.
Hello there, friends. A quick note before we get started. Just wanted to let you know that I do have a book that will be released shortly called The Big Silver Short, which digs into the silver market, the manipulation, the short paper, and features interviews with 15 of the world's top silver experts like Greg Hemke, Andrew McGuire, David Morgan, and Rick Rule. So if you'd like more information, especially if you're into silver, I think you'll love it. So click that button in the upper right. And with that said, here is today's episode.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. As you can see, I got Denver Dave Kranzler chuckling over there, so I feel I've done my role. But yes, we are back to dig into the gold and silver markets again today. Real quick before we get started, hit the subscribe, or even better yet, hit the notification button, that little bell down there, so that every time Dave is kind enough to join me on the show and talk about these gold and silver markets at a level that to me is sometimes beyond comprehension, you can stay notified. So with that said, as always, welcome on in there, Dave. How are you doing today, sir?
I'm doing well. By the way, I noticed, I think it was 2 videos ago in the comment section, someone said like, "Hey, nice Trump toupee," about my hair.
Yeah.
This is my hair. It's real. See?
Well, you could be faking that right now.
No, I'm not faking it. This is live, real time. It's real hair.
Well, again,
I'm thin on top, so you can't see the back, but I don't comb it over that part.
I appreciate you pointing that out, especially right after I said hit the notification button so you can stay tuned for important stuff like this. Because what have you laid that out for any other channel yet, or am I getting a scoop here?
No, this is original content.
Well, I am darn honored, and
well, I didn't appreciate the quip about my hair being a toupee and the comparison to Trump.
Well, I'm sure you'll send that guy some Tesla stock as a thank you. I did have fun giggling about imagining we were talking about this on Twitter. One of your clients got you a Tesla as a thank you present, and if there's anyone out there that wants to do that, I will go over with the video cameras so we can capture it. Although that Tesla stock getting a bit expensive, almost. I think it's up almost another $100 since last week. So,
are you saying this to irritate me?
well, I got to poke the bear a little bit. Although we won't get you too riled up, we'll dig back into one of your favorite subjects, obviously gold and silver. And like you cover in your mining stock journal, shockingly, the mining stocks. So curious, we're in getting towards the end of January 2020 here. And obviously a lot of the miners last year when bullion was moving saw, some decent moves. A lot of silver stocks even doubled. So given where we stand today, let's forget for a second about the fact that the Fed's making a complete disgrace out of the dollar. But with where gold and silver prices sit today, have people missed the boat on some of these equities? Are they still cheap, or how are you seeing that?
Missed the boat. I mean, this is just getting started. So, referring back to the dollar, it was actually this early this morning. I was looking at some charts. I like to do that every once in a while, even though I'm not really a chartist. And I don't know if you're going to put up that 5-year weekly dollar chart I sent you, but I was, theoretically, gold and the dollar is supposed to move inversely, and it's, because of the intervention that goes on. I mean, it's a loose correlation. I mean, certainly there's days when the dollar's up and gold's down. And then there's days when the dollar's down and gold's up, but then there might be days when they're both moving in the same direction. So I haven't run a correlation coefficient in a long time. So, I think it's, I don't know, 50 to 70% correlation or something. I don't know. But at any rate, I was, eventually all the money the Fed is printing and throwing into the system, unless they start to pull it back, it's gonna start to undermine the dollar. And yes, all the fiat currency, all the central banks are printing money and devaluing their currency, but there's issues like all of the debt that the U.S. government has that sort of compound the problem. And if you put that chart back up, I mean, I guess just to be timely with topics, I mean, it looks to me like the dollar's contracting the coronavirus. It looks like it's starting to roll over. It's forming that wedge formation. So theoretically, it could break either way. But on the bottom two panels are RSI and a MACD, and you can see that the upward trend in the dollar since April is not confirmed by the RSI and the MACD. Those are negatively diverging, and so it's, to me, it looks like the dollar is kind of technically set up in a bearish formation. Now that could change over the next week or month or whatever, but to the extent that the dollar does start to lose trading value from all the money printing the Fed is doing, it's gonna really send gold into outer space. And if you put up that gold chart, I mean, I happen to think about this because as I was preparing my mining stock journal that gets released tomorrow, or actually, I'm sorry, today. Today's Thursday, so it gets released this afternoon. I was looking at some junior mining stocks, junior exploration, like the micro caps that I follow and invest in and recommend in my newsletter. And those charts look incredibly bullish. A lot of them have kind of the classic cup formation, right? So, there's a chance that, they'll kind of go sideways for a bit and then break up. So, but I mean, just in general, the mining stock charts look extremely bullish. And I mean, if you look at gold, I mean, it clearly broke out of a lateral pattern, a sideways pattern that started, after it jumped in 2016 and peaked in July and kind of trended sideways in a fairly wide trading channel. And it's broken out a couple times. And one of the things that to me is intriguing is that every takedown attempt, every attempt to push down the price in the paper markets, it just triggers more buying of gold and it pushes the stock higher. I mean, we've seen it this week, all week, where gold will get pushed down either in the early morning hours when London opens or after the COMEX opens, and it's been generally rising in the early evening markets the night before. So, and that's associated with the physical buying markets of India and China. So at any rate, I mean, gold just feels really bullish. And in the class, a lot of people think that the mining stocks lead the sector, the gold stocks first, and that's actually not true. The way it works is gold will start to move higher, and you can go back to 2000 and see the pattern. Gold will start to move higher, and then it's followed by the mining stocks, and then silver follows. So, and that's I think that's kind of the paradigm that we're in right now, because gold's kind of breaking out, and the mining stock charts look bullish. And I don't have a silver chart with me, but silver, I mean, I don't think you can necessarily say the chart's bullish, but silver's one of those ones where it's like, you think it'll never go higher, and then all of a sudden out of nowhere it'll explode higher. So, I mean, I'm looking at a daily chart right now, and I mean, it looks like it could go lower if you were a chart guy, but I don't think it will. I think it's going to make another attempt at 18 and then break over it and then move higher. And at that point, it may start to outperform gold again.
Yes, and we have there's the 2020 chart, and I certainly agree with what you say about how silver pops at the times when we least expect it. It certainly seems like the volatility has picked up a bit this year. And perhaps before we wrap up, get your thoughts on Palladium, which has been fascinating.
I mean,
where we can get them now.
The guy to ask about Palladium is Craig Hemke, because he's been studying it for, I think, a couple years. He's been following it pretty avidly. And I don't follow Palladium. It's not a monetary metal. It's an industrial metal. I mean, it certainly has scarcity value, no question about that. Apparently, there's a massive supply shortage right now. In other words, maybe not necessarily mine supply down the road, but immediate supply for delivery. And someone pointed out just last week, they're like, what do you think about a Palladium short? And I looked at it and I'm like, I don't know a lot about it. And then I pulled up like a 2-year chart. I'm like, holy crap, this chart's parabolic. I mean, parabolic charts, there's no telling how long it can stay parabolic, but parabolic charts don't last. So certainly if there's a supply issue, eventually a higher prices will clear that up. But again, I don't know enough about the supply and demand dynamics. I mean, I know that Palladium is primarily used in automotive catalytic converters, and I think there's some defense applications, defense weapons applications. But beyond that, I think, I don't know. I mean, I threw out a mining stock that is a large palladium producer, and they also produce gold, but their gold production is declining. And I threw that out as a, if you want to make a bet that the palladium parabola breaks down eventually, I threw that out as a short idea. And actually the puts I recommended are up about 30%, actually a little bit more now because they just ticked up. They're up about, 35, 40% from the, we started trading Tuesday this week. So from Tuesday morning, you could have bought them Tuesday morning and you'd be up 35 or 40% right now.
Yeah, and Dave, interesting. You mentioned Craig, another one of my favorites out there. And I was actually reviewing the audio version of the chapter he did in the book that I'm releasing. And it was interesting. I remembered then, and I was reminded last night at the very end, he talked about Palladium. This was back, I believe it was February or March of 2019, so almost a year ago. And his thought was that, well, we have a structural shortage here, and if the metal isn't there, does this finally wake people up to what's been going on in gold and silver, which will be interesting to see if that does happen. I tend to agree with you. I don't want to get people on the wrong track here. My own personal belief, I'm starting to think it is perhaps more likely that we finally see some movement this year. Maybe instead of saying going vertical, we can start saying they're going Tesla.
Well, there's another parabolic chart, by the way.
Yeah.
Insanely parabolic.
I was telling someone at the Vancouver Resources Investment Conference last week about how you stack the tulip bulb chart next to Tesla.
Identical.
I hadn't noticed how much it's doubled in the past couple of months, which is stunning in its own right. Although another thing that did come up at the resource conference, be curious to get your opinion on. One of the things a lot of these miners have mentioned is that, fortunately, some of them are doing a bit better with the move in price we saw. Even for the silver miners going from 15 to 18, I think really helps a lot of these companies out quite a bit. And some of them mentioned that as should the price continue to go higher, in addition to making more money on what they're selling, they also start, putting a lot of the projects that have been dormant back into production. So for some of these miners, are we going to see an environment where in addition to having a higher margin, they also could be increasing production as new projects go online?
Oh, absolutely. Certainly. There's a lot of projects that aren't economical because it's because the cost of getting it out of the ground and the grade of the ore, with silver below 20. But if silver moves above 20, you'll start to see a lot more projects come off the back burner and start to be advanced again. No question about that.
Yep. Well,
But the upside for the companies that do produce or are, you know, advancing towards production, that have high grade resources, Mag Silver being one of them, or Silvercrest Metals being another one, those have extraordinarily high grade deposits, and the upside leverage to the price of silver is phenomenal when you have, you know, a very, very high grade ore like that.
Yeah, actually did check in with the Mag Silver guys and learn a little bit more about their project. They were up there, as were most of the other companies. So one of these days, I'm gonna yank you out of your cave and bring you to one of these shows with me. Although perhaps in wrapping up, to be serious and focus on the more important issues, I know you're playing tennis today, so let's get a breakdown of your game. How's the serve looking? What are the fans going to be watching for today?
They'll be better off if they just watch Australian Open reruns of the second round.
Well, I
will say, you know, I actually get a lot more out of meeting mano a mano, face to face with mining companies, you know, off-site, not in a conference setting. Too many distractions. And in fact, at a meeting that I had with a local company here, I got a new junior mining stock idea. It's basically a 10-cent stock, and I think you know, I don't know if it'll ever advance into an operating mine, but I mean, this thing has incredible upside. And this particular company took close to a 10% stake in this stock earlier this year. So, you know, that's where I like to get some of my ideas, just meeting with CEOs of mining companies individually in private.
Yeah, and perhaps, Dave, just in wrapping up, you can let folks know where they can find the Mining Stock Journal. I'm looking at the last one you sent here, and certainly it's not perhaps the easiest industry to just dig into by yourself, which is why I appreciate what you share, and perhaps you let folks know where they can get that.
Well, they can find it in their email every other Thursday if they just subscribe. No, investmentresearchdynamics.com is my website, and there's a link there that you can learn more information about, you know, subscribing, or decide if you're not interested in subscribing.
Well, I sure appreciate that. You know, I'm a believer of what you put out there, and then are kind enough to give us on the show here. So with that,
appreciate that, Chris. Likewise with what you're doing.
Well, thank you, sir. And I'll let you go out there and hit the courts. Hopefully you'll have an update for us next week on how it went. But thanks again, as always, for joining me, and we will see you next week.
Thanks, Chris.
So that is today's episode. I do thank you for spending some time with me and hope you enjoyed it. If so, go ahead and hit that subscribe button, and I'll see you again soon.